today. Let's move on and get you some fundamental opinion on the market. Mr. Madangopal Ramu, the head of equity at Sundaram Alternates, joins us on the show now. Hi, good afternoon. Thank you so much for making time. What is your view as far as market goes? Because for now, the consensus now seems to be developing that we have need a floor for the market. Is that something that you concur with?
Hi, good afternoon. What we feel is market is going to be range bound in the short term. I think oil is the key, and we feel that oil might remain sticky. We have a winter to cross. Till that point of time, we think inflation might remain little more sticky. Market in the short term might remain range bound, but any investor who is taking a 3 to 4 year view, I think this is a great time to start investing into specific stocks, because there are specific stocks where the growth is very impressive. They have seen a reasonable correction, and any 10%, 15% correction from here, I think some of these companies are looking extremely attractive. So I think it's it's important to be stock specific. Even within sectors, there could be winners. So it's a market where stock picking can help you to make good money over the next, say, 3 to 4 years of holding. So that's the way we are approaching at this point of time.
Do you also look at Sensex? In terms of Sensex, what is the value that you would look at? What is the Sensex EPS that one should look at?
So if you talk about Nifty as such, what we see is at this point valuations are likely, it is likely to be range bound, as I said, and I think there is no need to jump in an urgent way. You will get your opportunity over the next, say, 6 months, in our opinion. At point at which we find the overall market can become attractive for investors is somewhere less than a 1 year forward ratio of around 15 times or below. So I think next 6 months, if market consolidates here, and if you are able to get market around 14,500 to 15,000, I think those are periods where for a broader market can look very attractive. But again, I'm repeating, it's not from a 2 to 3 year view. Market might remain range bound, but specific sectors and stocks within those sectors can deliver a meaningful alpha for us.
Right. In terms of sectors and stock, what is something that you would like? What is something that you would be overweight on, or themes that you would look in this market? Value versus growth. Play out on deleveraging. Play out where deals could be possible. How would you? What sort of themes would you look at?
So we are positive on 3 themes or 3 sectors, we could say. Within banking, we are very positive on the retail banking and private banks and NBFCs focused on this space. We are positive on consumer discretionary. Temporarily, there could be 1 or 2 quarters of slowdown, but this is a very structural story, right? So next 10 years per capita income growth, this is a decadal opportunity. So in our opinion, next 2 quarters, if you're seeing some weakness there, it's a great opportunity to go and accumulate some of these consumer names in the discretionary space. And we are seeing a lot of momentum in the exporter side, particularly the manufacturing side. Specialty chemicals, pharma API manufacturers, some auto hanks. I think these are areas, these are 3 broader sectors or themes that we feel there is a good value creating opportunity over the next, say, 3 to 4 year time period.
Interesting there, because there's a bit of dichotomy coming in here, Madangopal, because there are experts who believe that it's time to actually look inwards rather than outwards, and you are betting on export facing economies at a time when there are worries around global recession, etc. as well. What is your view when it comes to the domestic cyclicals, the likes of infrastructure, industrials, etc.?
So first that you asked on the export why at this point of time. Europe is going through one of a very high inflation situation. The war seems to be much more sticky at this point, might be prolonging for a long period. We expect that some of the manufacturing facilities in Europe might become very uncompetitive in some specific sectors, and more outsourcing might come to some of the Indian companies in those spaces. Particularly specialty chemicals and all. We see a lot of momentum from companies we have invested there. in terms of what kind of projects that they are getting. So that gives us a lot of confidence that if we are stock specific there, you can find some real good opportunity. From what you asked on industrial and infrastructure, I have been tracking infrastructure as an analyst for a very long period of time. It's been a big disappointment for the last 10 years because private capex has not seen any momentum in India for so many years, right? We don't think private capex is coming back in a hurry even now. It will take another year or so. We need a very strong consumption to happen. Post that, we might see some private capex coming through. Infrastructure is mostly supported by government spending at this point of time. Given a year where we are seeing very high oil prices, we need to be careful about betting too much on the infrastructure spending also. But yeah, the efforts are there for investing a lot, but we have certain fiscal constraints also. So overall, I feel infra and industrial. Probably we will have to wait a year before the private capex picks up momentum.
All right, so thank you so much, sir, for taking out time for us. It's the first time an interaction with us. Hope to see you again soon on
Thank you so
Devina.
much.
Earlier in the day, we did speak to our big market guest, Devina Mehra. Needs no introduction. Let's hear out what she told us in terms of markets, way ahead, and the sectors to look forward to.
The prices come down, there is more room for FMCG purchases, which was what was happening in the previous few months, was that people were postponing not just consumer durable purchases, but even things like shampoos and all that, which was showing in the declining volumes for FMCG. So FMCG, after a very long